Hey everybody, just let me know in the chat if we have any sound. I know over the past few days we were having some issues with the audio, so please let me know in the chat. Let me see. Juan says the sound is off. Alright, let me try to fix that. Give me a second. Oh, it's good? Okay, cool. All right, let's see. Okay, good evening everybody and welcome back to Walks and Wall Street. Today is October 25th, 2023. It's about 9:07 p.m. Eastern Time, and we are reporting live right from the behind, I should say right in the back, of 432 Park Avenue. It was a major eventful day today on Wall Street. Let's start off with some technicals, because this is very critical. We talk about this a lot. The S&P 500 has now broken below the 200-day moving average, and as we know, the old saying goes, nothing good happens below the 200-day. It was a pretty nasty sell-off on Wall Street. The S&P 500 was down about 61 points, just shy of 1.5%, closing the day at 4,186. So the sell-off continues. We have some good news to talk about. We have some bad news to talk about. But I think the star of the show today on the street was the earnings report from our good friend Mark Zuckerberg and Meta. I mean, just an amazing quarter. Talk about a comeback, beating on both the top and the bottom line, beating on EPS estimates or earnings per share, and also crushing revenue too. So Meta reported $4.39 worth of EPS. The majority of analysts on Wall Street were expecting $3.63. On the top line, revenue came in at $34.15 billion. Expectations were for $33.5 billion. So just an amazing beat on both the top and the bottom line. But check this out. Let's look at profitability. Let's talk about net profits or net income for the company. Net profits came in at $11.6 billion. It's quite fantastic, especially since last year. So this time last year, they reported a profit of $4.4 billion. So they've more than doubled their profits from the year-over-year ago quarter, which was fantastic. As we go through the live stream tonight, we'll talk about some of the major, I should say, data points within the earnings report, particularly daily active users, monthly active users, and ARPU. Now, ARPU is an acronym that stands for average revenue per user, and this is a pretty big metric that many analysts use for tech companies, particularly if you are on an advertising business or like a SaaS business, software as a service. ARPU is a really good metric for that. So Facebook, or I should say Meta, reported an ARPU of $11.23. That's actually beating analysts' expectations. Daily active users across all platforms of Facebook, Instagram, and the like, 2.09 billion daily active users. I almost can't even wrap my head around that. 2.09 billion daily active users across all platforms owned by Meta. Kind of insane. Monthly active users grew to 3.05 billion active users. Now, this just goes to show that, advertisers will really flock to where the audience is, and we've consistently seen growth in daily active users across Facebook and Instagram. Same thing with monthly active users. And in this most recent earnings report, we actually had an uptick in Facebook, particularly over the last few quarters. We've been seeing this demographic of older individuals, I should say older millennials, really taking the lion's share of the user growth on Facebook. But we're starting to see some Gen Z uptick for the platform, so we'll definitely watch that. Now, advertising revenue rebounded in a really big way after being down for a few quarters now, which is really good news. I think that trajectory will continue into the holiday season. So if you think Q4 and even in Q1, this is really when a lot of that advertising revenue starts to ramp up, right? Because advertisers want to catch a lot of the viewer eyeballs going into the holiday season for all of your holiday spending, right? You have major holidays such as Thanksgiving, Christmas, Hanukkah, whatever holiday you celebrate going into the end of the year, and even in New Year's, you usually start to see advertising revenue pick up really an immense amount. Also, it tends to be more expensive for advertisers to advertise going into the end of the year. So CPMs are usually higher across all platforms. This is why you'll usually notice, if we kind of revert back to YouTube, if anybody here in the chat has a YouTube channel or knows somebody who does, generally speaking, towards the end of the year, going into Q4, you have those advertising revenues pick up. But anyway, that's besides the point. We'll talk about that a little bit later. We will cover Reality Labs. So Facebook, or I should say Meta, and Mark Zuckerberg is really making this big push for the metaverse. They really want everybody to start using their Quest headset. They're investing tons and tons of money, billions of dollars, into getting this up off the ground, but it's still losing money. But I think that's okay. So Reality Labs lost about $3.74 billion in this quarter alone. To put that in perspective to the audience, this whole metaverse play, or as they call it, the category is Reality Labs, it's lost about $25 billion so far since the start of last year. Now, for a company like Meta, they can kind of afford to bankroll this entire thing, right? I mean, even though you're losing billions and billions and billions of dollars every single quarter, to be able to post profitability of almost $12 billion, it's pretty significant and actually pretty impressive. So we'll do a deep dive and we'll go into that. I think one of the main reasons why Mark Zuckerberg and his team at Meta was able to do a complete 180 since last year is because they got really, really mean, lean, and aggressive with running their operations. Just look at the employee counts. Meta posted that they had 66,185 employees at the end of Q3 2023. Now, for some comparative analysis, I want everybody to look at how many employees Meta had this same quarter last year. It was about a 24% reduction in the workforce. So this just goes to show there was probably a lot of corporate bloat during the pandemic, and this is something we've talked about. As you had massive amounts of fiscal and monetary stimulus sloshing around the economy, corporations got lazy. They were making money hand over fist. To keep up with that demand, they had to hire so many employees, and that created a lot of duplicity within the organization. So to go from Q3 2022 having a net income of $4.4 billion and having 25% more employees at that time, to be able to fast forward a year into the future and provide net incomes or net profits of $11.6 billion with 24% less employees, that's a big success. And I think we need to credit Mark Zuckerberg and his team for that. Those are tough decisions you need to make. As a CEO, you never want to come to see the day where you need to lay off employees, but at the end of the day, you got to do what's right for shareholders and you got to do what's right for the business. So here's my question to you folks watching Walks on Wall Street. Are we going to see companies follow suit with Mark Zuckerberg? Corporations from across the United States and the globe are probably looking at this and saying, hey, 24% reduction in employees, and you're still able to operate just as efficiently as before, if not even better? I don't know. We'll check it out. Before we get started, let's head over to cnbc.com/bonds. Once again, that is cnbc.com/bonds, and let's take a look at that yield curve. Let's look at the long end of the curve. The 30-year U.S. Treasury is now back above 5% at at 5.09%. That 10-year U.S. Treasury yield came in at 4.964%. And then all the way at the short end of the curve, we now have the 1-month Treasury at 5.413%. Obviously, higher interest rates put more pressure on small cap companies. So we're going to talk about the Russell 2000 today. And I think the majority of the businesses that are going to be holding up relatively well in America going forward are going to be some of the larger cap tech stocks. A quick announcement, everybody. Tomorrow after the closing bell. So tomorrow is Thursday, October 26th. Amazon will be reporting earnings. But check your email. Tomorrow after the bell, I will be sending all of you an email of our next edition of the Behind the Street newsletter. So if you want to receive all of my equity research, all of our fixed income research, real estate research to your email box tomorrow, go ahead and scan the QR code on your screen, or you could type !news, NEWS, in the chat and click the link, and you will be signed up to receive the Behind the Street newsletter for free. And again, that will be sent out tomorrow after the bell. There is a ton of stuff we talk about in that newsletter. We talk about how increased interest rates are really going to put a hurt on Russell 2000 and small cap tech stocks. We do a deep dive throughout bank earnings. We talk about credit card rates. We talk about the Fed funds rate and future monetary policy. And we even make some predictions on the fate of many U.S. companies as it relates to bankruptcy filings. So you do not want to miss that newsletter. Go ahead, scan the QR code, punch in your email, and we will see you tomorrow in your email box. So I'm going to go ahead, close up the laptop. I'll say hello to everybody in the chat, and we will get started on the live stream. So give me one moment, and we will get started. All right, gonna clip the microphone on here. Guys, I think let's go to Sutton Place tonight. Might as well. It's a beautiful day in Manhattan. It was 65 degrees today. It felt like a beautiful summer day. You know what it felt like? I'll tell you what it felt like. It felt like you're coming off the back of relentless 20-degree weather days in New York City, and then you have that one day where it's like 45 degrees or 50 degrees and it feels like you're on Miami Beach. That's kind of like what it felt like today. Even though it wasn't 80 degrees, it kind of felt like it. 65, sunny, absolutely beautiful here in the city. So we are going to make a left, head all the way over to the Upper East Side of Manhattan and check out one of my favorite neighborhoods called Sutton Place. All right, team, let's see who's in the chat. I see JC is here, Kathy R. What is going on? Wendy England, Richard Vogel. I see all of our moderators here. Danielle, British Gray from Tampa, Florida. Skip Turner, what's up? Dennis the Menace, Matthew P is here. Lena Sandoval, thanks for joining us on this beautiful night in Midtown Manhattan. I see JD, Sunshine Hatch, who else we got? D, what's up D? It's a Cruise Life is here. Mariana, Texas. I see a lot of viewers from South Korea, so good to see all of our South Korean and Japanese viewers in the chat. Tom M says your mic is a bit muffled. Maybe we have been having a lot of audio problems. So let me check it out. Let's see. All right, what do you guys think? Is the audio good or is it not good? We have been having some issues with the audio, so let me know in the chat. Can you guys hear me or not? We're on East 55th Street in Madison. You're looking at Jefferies, which is a major financial company. NAV 0407 says audio is good. All right, cool. We'll get started. Perfect. Let's head uptown a little bit, and then we'll walk over to Park Avenue and go to Sutton Place. Now, Guys, you can't see it now, but this, I mean, pretty much almost from Madison Avenue to Fifth Avenue was totally shut down earlier today, pretty much because we have the Trump Tower here. And I believe the former president, so Donald Trump, I believe he was at his court case earlier today. So there was tons of police barricades, there was Secret Service, there was all types of stuff that was creating a lot of traffic here in New York City. But I don't know, I haven't really been following it. If anything, I try to block out a lot of the political news, but since we're here, check it out. Trump Tower, it seems like the lights are on upstairs, so maybe the former president is here in New York still. Someone says, what are your thoughts on 270 Park? I'm really excited about it. I think it's going to be a great building. For those of you who don't know, 270 Park Avenue is going to be Jamie Dimon's brand new office tower. I think it's going to be an amazing addition to Park Avenue, and I'm really excited about it. In addition to that, I'm excited for the CEO of Citadel Securities, Ken Griffin, to announce when he's going to be breaking ground on his office tower right here on Park Avenue. I heard about that. DC 322 says, Tom, the union reached a tentative deal with Ford just now. I saw that come across the Bloomberg screen right when I left the office. This is 432 Park Avenue right in front of us. This is one of the most exclusive buildings in all of New York City. Now, here's the thing. I feel like this is going to be a perpetuating cycle with the unions, and we've talked about this before. Now, I don't know if this is just more shown to us, I should say, because of social media and the like, but here's what it seems like. It seems like more and more unions across the country have been going on strike and gaining more influence, particularly from other unions who have decided to protest, demand wage increases, and I think that's going to continue. Now, I guess it's good for the employees, right? I mean, it's never what you deserve, it's always what you can negotiate. That's one of my favorite sayings. You'll never get what you can deserve, you will only get what you can negotiate. So, I mean, hey, by all means, but if you think about monetary policy or the potential outlook on monetary policy that's set by the Federal Reserve, what is one of the number one things that not only Fed Chairman Jerome Powell, but a lot of the other Fed presidents, such as New York Fed President John Williams, he said, look, wage inflation continues to persist. And until we see wage inflation come down, we're not even going to think about easing up monetary policy conditions. It's not going to happen. So could this trend, I should say, of increased worker strikes potentially backfire on the workers, right? And here's what I mean by that. Hold on one second. Could potentially backfire on the workers. And here's what I mean. If you continue to have wage pressures be so persistent, the Federal Reserve is going to continue to be steadfast in their job of not only bringing inflation back down to the 2% target, but also to increase unemployment to around 5%, which, guess what? That's going to throw a lot of employees out of work, which is unfortunate. So we'll see. NAV 0407 says monetary policy is the cause of wage inflation. Yeah, I would generally agree with that. Particularly, I would more so say the past decade. Our monetary policy of the past decade has essentially what's led to a lot of the wage inflation, I should say, or the lack thereof, the lack of good stewardship over monetary policy, I'd say. You know, if you leave interest rates artificially suppressed for 12 years and then you give a crazy shock to the system, right, within 18 months, essentially going on the heaviest quantitative tightening cycle we've seen since Paul Volcker in the 70s, then yeah, I would say absolutely. All right, guys, we are now at the Ferrari showroom right here on Park Avenue. Very strategically placed, I'd say. Andre Brown is here. What's up? Wendy England says if companies want to continue to make record profits, they need to keep the workers. Mariana, Texas is in court face-off. Michael Cohen testifies against Trump in the fraud trial. Yeah, I'll have you guys update me on that. I can't stomach thinking about it. These kind of look cool. Hey, Rockstar's here. What's up? All right, out of all these 4 Ferraris here, which one is your favorite? Do you guys like this sort of camouflage green? Do you like the bright blue? Or, what do you think? Do you like the orange? I'm not a big car guy. I don't really like Ferraris, but if I had to pick one, I'd probably go with the blue one, I think. Agree, disagree? Austin City Limits is green. I'm seeing a lot of blue. Yeah, the blue one's nice, right? Hey, Ryan Beck, what's up? Says evening all, I'll take the red one. All right, let's check out the red one. We'll have to go around the block. Ryan, we were just talking about Meta. This one looks like an old classic one. This is probably, well, according to Dan Sang, this is, what, a $500,000 car, something like that? Hey, David from Southern California. Good to see you as always. C says, I think it's down to less than 10% of the U.S. workforce is unionized. I think that sounds about right. Diamond Dave's is automatic orange for me, Tom. $5 million is TK Porsche. Okay, I'm going to step out of the car conversation. You guys know a lot better than me. Well, let's check out what it is. This is a 1962 Ferrari 330 LM. I have no idea what that means. Yeah, it looks very expensive. It looks really nice, though. This almost looks like more of an art piece than anything, right? Kind of stunning. And I think it's very strategically placed because guess what you have across the street? This is 425 Park Avenue. This is where Ken Griffin has his office. So one of the richest and most successful hedge fund managers in the world, his office view is very strategically placed. Well, Ferrari's very strategically placed it right across from his office. So he could do some window shopping as he's market making, I guess. All right, guys, let's head to Sutton Place. But yeah, you know, today I think the biggest major event on Wall Street that everybody was in such anticipation of was the earnings report from Meta. Now, there was a lot of, I would say, conflicting viewpoints from analysts, right? Particularly as it relates to profitability. Is the Reality Labs sector of Meta going to take off? Is it going to gain market share? Are they going to stop burning billions and billions of dollars a quarter? What's going to happen? I think overall, in my view, the quarter was a total blowout. They did a fantastic job. They beat expectations on both the top and the bottom line. Wall Street analysts were expecting $3.63 worth of EPS. They crushed that. Came in at $4.39. I mean, really, really impressive results there. And they also beat on the top line. So for top line revenue, Meta reported $34.15 billion when analysts were expecting $33 billion. Very impressive. However, I mean, we do have to say, in all fairness, the thorn in the side of Meta right now right? Just basically speaking off of profitability is the Reality Labs. So all of the Quest headsets, all of the metaverse stuff, that is costing Mark Zuckerberg a ton of money, okay? If you go to the Meta Investor Relations page, you could actually download the earnings deck for free. I believe it's on slide 4. I don't know, you could check it out for yourself. But Reality Labs lost $3.74 billion this quarter alone. So they're burning tons of cash. But this is what Mark Zuckerberg said on the call, sort of addressing that concern. He's willing to lose essentially as much money as it takes in order to drive as much research and development into this Reality Labs project as possible, because he deems that this is the future. So if you look at the TAM, right, the total addressable market, Mark Zuckerberg believes that the TAM of this opportunity is so massive that if they have the first mover, first market advantage to this, it's really going to be lights out. And I think you see other companies kind of following suit, right? It's sort of like a proof of concept. If you see a company like Apple, led by one of the most successful tech CEOs of all time, Tim Cook, starting to come out with the product for the space that competes with your flagship product, the Quest headset, I think that's proof of concept. So we'll see. I mean, at this point, the advertising business of Facebook and Instagram is really carrying the weight of the business, and they could use those profits to throw into the Reality Labs. Will it take off? I don't know. I'm not too sure. I'm not totally convinced. My biggest critique about it, I feel like it's too immersive almost. And I want to know what you guys think too. I want to know what you guys think about the whole virtual reality metaverse stuff. And the reason why I think it's too immersive is because I would much rather have, in my opinion, more of an augmented reality experience as opposed to totally virtual where I'm really not aware of my surroundings. I think an augmented style reality is the future, in my view, but again, I'm not a billionaire tech CEO like Mark Zuckerberg, so probably he's right and I'm wrong, but I don't know, I would much rather have something that projects data and information in my field of view than totally transforms me into another world where it takes me out of my reality, I think. Any thoughts on that? And I guess the biggest question of the night, who here in the chat actually has a Quest headset from Meta? And what do you think about it? Do you like the product? Do you not like the product? What do you think? We now have an amazing view of the Chrysler building. Ben Cunningham says the Quest headset is trippy. Vivian Francesca says, yes, Tom, I agree 100%. C says they want us to be 100% distracted. Interesting, maybe. Janice S says, I'm in agreement, Tom. Jeff says that's exactly the angle Apple is going for. And I think Apple also has better PR and they have better advertising, in my view. But we'll sort of, we'll kind of play devil's advocate for the purpose of the live stream. Do you know what was the one thing that actually moved me a little bit down the playing field to being fully on board with the metaverse? It was the most recent podcast that was put out on Lex Friedman's channel with Mark Zuckerberg. Now, when I'm telling you I was so ridiculously impressed, the technology was like really scary good. It was amazing. And I understand a lot of people don't like Mark Zuckerberg. I get it. He's a controversial guy. I understand. But if you have time this week or over the weekend, you've got to trust me on this. Go watch that podcast. Seriously. If anything, this is a very good market reconnaissance, market research tool here just go watch the Lex Friedman, Mark Zuckerberg podcast and let me know what you think. Because I really do believe that that type of technology, should it be held up to that standard, is probably going to be the future. Rockstar, you saw it and you said it was really cool. Reviews says, hey Tom, both VR and AR. In the screen in 2D, right, like you're seeing right now, if you turn your head towards the sky, the camera automatically pivots towards the sky. I think that would be kind of cool. All right, this is the Lipstick Building. This is actually where Bernie Madoff was running his Ponzi scheme, right in the building you're looking at right now. Kind of wild, but it's true. Right on the corner of East 54th Street. We're going to continue to go all the way to the east side. Very seldom do we explore the east side of Manhattan on the stream, so we'll do that tonight. Tom M says the NASDAQ. Yeah, now I'm a little bit concerned because the technicals of the market are suffering immensely. Now there's a few reasons for this. I think the internet is iffy here.
Yeah, I would say virtual's fine. I wouldn't waste this.
Let's see if we can get to 2nd Avenue. Maybe some of the buffering will cease to exist. We'll see. Let's make a left here. And then we'll go to Sutton Place. All right, I think we should be good now. Oh, Joe says, did you see the drone show in Central Park? I didn't get a chance to. But it looked really cool. I actually saw a protest. I saw the protest for the drone show in Central Park. Apparently there were a bunch of people that were protesting against it because they thought that the birds migrating were going to get disturbed by the drones. Did anybody see that? I don't know. There's always something going on in this city. And there's usually always something to complain about by people. But look at this. This is a pretty cool view of 432 Park, all the way from the east side. It's an amazing shot of Harry Maclow's building. All right, we are going to go up to 57th Street and make a right. All right, but anyway, so I think one of the things that we really need to watch out for, right, as we have the market, declining quite significantly here, is the following. You're probably going to see a big flight to quality of a lot of the larger cap mega tech stocks. A lot of companies they're calling the Magnificent Seven. Now, the Magnificent Seven essentially is made up of Tesla, Google, Microsoft, Meta, Apple, Nvidia, and Amazon. Now, we've had the majority of companies report earnings already, but we're still waiting on quite a few. We're waiting on Apple, Nvidia, and Amazon. I believe Apple reports November 2nd. Amazon should report tomorrow after the bell. And I think Nvidia is a couple weeks out. I think maybe even mid-November, maybe even November 20th. I don't know, I gotta see. But here's the thing, right? As you have interest rates go up significantly, as they have, it's really going to put a lot of pressure on companies who their business models are reliant on debt acquisition to run their business. Now, you don't have that problem for the big tech stocks, right? Just go ahead and look at the balance sheet of Apple. Check out how much cash Apple has on the balance sheet. Check out how much cash Meta has on the balance sheet, and all of those other big tech companies. So even though interest rates are going up, they're not going to be impacted as much because they're not going to have to tap the capital market to the debt market to raise money. So think about S&P 500 companies, right? Big, solid, generally more stable companies. They should be able to weather the storm a little bit more. Now, will they go down and will they go through a correction? Yeah, absolutely. But in comparison to, let's say, the Russell 2000, smaller cap companies, you have to look at the amount of debt that's on those companies' balance sheets. It's quite a lot. And there was some research out from Bank of America that says the vast majority, there's going to be a tidal wave of debt that is going to come to maturity, right? Long-term debt that is held by Russell 2000 companies that are going to come to maturity over the next 4 years. And interest rates have nearly tripled. So I think you're going to see a very, very big increase of bankruptcies and even earnings declines and recessions. I mean, it's going to be 100% almost lock on those earnings declines for those particular companies, smaller caps, but you could see some bankruptcies and insolvencies for sure. Absolutely. But tomorrow, after the closing bell, I just finished writing this week's research piece, and we talk about the following. We do a deep dive in bank earnings. We talk about small caps, the Russell 2000, and their exposure to interest rates, and much, much more. So after the market closes tomorrow, so right after Amazon reports, check your email because I'm going to be sending out that research piece. And if you haven't signed up to receive it already, and if you want to have a complete archive of all of our research and all of our financial newsletters, just go ahead and scan the QR code on your screen, and you will be taken to the landing page where you could read all of our research and punch in your email and sign up for free. This is an amazing shot of 432 Park Avenue, all the way from the east side. This is from First Avenue. Hey, MBA Elias is here. Says, hey Tom, how are you? Hope you had a good day. Yeah, it's been a pretty good day. We were talking about Meta's earnings report. Had a pretty decent quarter, beat on both the top and the bottom line. Advertising business and advertising dollars are coming back, so pretty good. However, the Reality Labs business is still burning tons of cash to the tune of $1 billion. I think this quarter they lost almost $4 billion just on Reality Labs alone. And since this time last year, the unit has lost about $25 billion. which I guess they can afford to do, right, if they really believe in this metaverse stuff, but we'll see. All right, guys, we are now at Sutton Place. This is one of my favorite locations in all New York City. Absolutely beautiful here. You know, Brad's brain, I did see that. So we talked about existing home sales, but, we talked about existing home sales, but new home sales came out today and way, way better than expected. Now, I think a few things are at play here, such as the following. I think you're seeing a lot of these home builders get a little bit creative with not only the financing, but giving incentives to get the deals done. So probably buying down, customers' points on their mortgage, maybe even reducing pricing and things like that. So look, that's essentially usually what happens at the point in the market cycles, right? If you want to get deals done, well, sellers are going to need to be willing to negotiate a little bit more. And, we had a major pickup in new home sales. And I think it beat by a wide margin, too. Like, it beat by hundreds of thousands. Hey, LA 0070 has really enjoyed the Sutton Place daytime stream. Yeah, that was in the pouring rain. So this is going to be at nighttime, and thank God it's not raining anymore, but it's a beautiful neighborhood here. It's very quiet, very quaint, very charming. Hey, Terrence. Oh, no way. Cool. Knicks season opener at Madison Square Garden right now. That's awesome. Check this out. Beautiful shot. Look at how cool the reflection of the moon looks like on the building here. Hey, JPEC 43, this is a nice part of town. It really is. This is one of my favorite neighborhoods in all of Manhattan. It's quiet. There's a lot of co-ops in this neighborhood. Older buildings, you're close to the water. But you're not too secluded because it's about a 10-minute walk away from Midtown Manhattan. You're on Billionaires Row, 57th Street. But it's just a very quiet, very, very nice neighborhood. Hey, Tahoe Two Wheels. Says, hey Tom, looks like a beautiful night. It's a really, really beautiful night. And I think we'll make it just in time before they close the Sutton Place Park. But these townhomes are my favorite. Look at these. These are the same ones we were checking out during the day. And in the distance, you could see the 59th Street Bridge. Make a right on Sutton Square. Tahoe, as rental prices go down at all? Absolutely, yeah. Absolutely. Particularly around here. That's one of the things I've been talking about is, if you're looking for a good deal, there are good deals to be had. You just need to know where to look, right? You just need to know where to look. And in this market, assuming you don't want all of the ritzy and glitzy condominium amenities like swimming pools and gyms and all the crazy stuff, condominiums co-ops, in and around the Upper East Side of Manhattan, and particularly Sutton Place, are trading at discounts as it relates to the comparative price per square foot for some of the condos. So if you just want a nice place to live in an older building that doesn't have all the amenities, you can get more bang for your buck in terms of price per square footage. And you get an amazing view like this. Oh, no way. TC says, I took my family to this area when visiting New York City. Would have never known about it before watching your streams. Thank you as always. That makes me really happy to hear that. Because I think a lot of tourists, particularly tourists that have only gone to New York once or twice, I think they spend a little bit too much time around the main major tourist attractions, and they could miss out on a lot of the hidden beauty in New York. And it's not too far away either. I mean, you're right in Midtown Manhattan. All you do is walk as far as you can, until you really can't walk anymore, right on 57th Street. And you'll see a ton of these amazing co-ops. You'll see all of these amazing townhouses right here overlooking the park and overlooking the water on the East River. It's amazing. Fascinating, since I like the older buildings more than the newer ones. You know, it's a weird dichotomy that's going on, because you're seeing a lot of the new money, as they call it, in New York, and a lot of the international money and the international buyers. They like all of the high-rise, brand new condominiums with all of the crazy amenities. And you guys would be surprised. I mean, there are some buildings that have amenities that you wouldn't even believe, okay? Some of them have dog spas. Seriously. In your building, you don't even have to take your dog to the groomers. Inside the building, there's a dog spa. It's incredible what some of these developers are thinking of. It's almost as if you never have to leave your condo. Everything is right there on premise. Restaurants, private dining events, private bars, pool tables, golf simulators, anything you can imagine in a lot of these ultra luxury high rises. You have it. Saltwater swimming pools, freshwater swimming pools. And that's been a real big difference than a lot of the older New York, right? So traditionally, a lot of New Yorkers didn't want to live in Midtown Manhattan. They wanted to live on the Upper East Side or the Upper West Side. Hey, Dan says, Tom, I was in Edgewater, New Jersey last week. The view of the Manhattan skyline looks much brighter on the Jersey side than the Long Island City Pride. Nice. Yeah, I always like the views of Manhattan from Hoboken. And this is going to be the brand new park right here. I guess you could call it the, what's the official name of it? I think it's called the East River Park. It almost looks like the High Line. It's a High Line suspended above the East River, pretty much. Imagine having that house. But I think I agree with you guys. I may want to have one of these Sutton Place apartments. Or I should say prefer it over some of the newer units. However, I will say this. Yesterday, I was in one of the most, I will say the most stunning property I've ever been in my entire life. And it was the 83rd floor residence. So the entire 83rd floor of 157. Insane. The views from that apartment were so stunning, I can't even describe it. Now, you can look it up on YouTube and see a lot of the property tours, and they look absolutely stunning on the property tours, but I'm going to be honest. It's completely different in person. It's almost indescribable in person, being 80-something stories up above Midtown Manhattan, overlooking Central Park. Now, I know Noble Black has the listing, and it should be going up over the next couple months here. But if you look at my Twitter page, if you go to @WalksWallStreet on Twitter, or I guess now it's called X, you'll be able to see it. I posted a video of the view. It's really insane. Hey, Brian, thank you so much for your $2 donation. Let's just call it Walks in Wall Street Park. Good to see you, Brian. I think that'd be a good name change for the Sutton Place Park. All right, now these townhouses look stunning here. I think they look a little bit better at night. Really magnificent. You know what? That looks like a full moon. Are we going to have a full moon on Halloween this year? I know, Joe's is super quiet. Hang with Mark Moms. There's beautiful windows on one of them. Great character, too. It really is. I'm going to look for some rentals over here. Very dog-friendly neighborhood, too. We'll take a walk all the way down the block. This is Sutton Place South. Hey, NBA Elias says video or VR will never replace the look and feel of seeing a property in person. I think I agree, particularly a property of that caliber. Hey, Lynn, this is Tommy doing the Halloween village walk to the parade. I don't think so. We usually go on the tail end of it. I think it ends at 8:30. That's when we usually start streaming. But you know what? I was looking outside of the office window today, and I saw literally hundreds of people dressed up in Halloween costumes, roller skating. I should have taken a video of it, but they were going all the way up Madison Avenue. There was hundreds of people on roller skates dressed up in Halloween costumes. It was pretty cool, not gonna lie, it was awesome. Did anybody else see that in the city today? Maybe as you were commuting home from work or something? Maybe we'll see them tonight. Maybe we'll actually see them as they head down. Let's head back further into Midtown, and maybe we'll even cross paths with them, who knows? All right, now this is pretty much just a sea of scaffolding here. I did. No, I did see the new CEO announcement. You know, and I've been noticing a trend. I think this year has been the highest year for exodus in the C-suite. Now, some people are saying, are a lot of CEOs bailing on the operation because they think the worst is yet to come? Maybe. Are people just burnt out? It's possible. Now, I can't really guess as to what people are thinking. Let's cross here and check this out. I believe this is all new. Sutton Place Park. I don't think we can go across the bridge just yet. But I don't know, it is possible. So this is going to be the extension bridge to the East River Park. It's pretty cool. No way. What happened in Maine? Hold on, I'm seeing something in Maine. Can anybody update us in the chat what's going on? Maine Hospital. NBA Elias's Maine situation is brutal. $22 killed. How? Maybe it'd be helpful to provide some further context on that. Hey, Patricia Ivory, what's up? Good to see you. Wow, an active shooter. Holy shit. Oh man, that's exhausting. Wow, 50 to 60 were wounded at several locations. Oh my God. At a bowling alley. Oh my gosh. The world is a crazy place. Jeez. That's so horrible. Wow, NBA Alliance is the IDF just started their ground assault into Gaza as well. Man, what a crazy, crazy world, man. I don't even know what to say to that. Yeah, Panda Express is unsettling times. Sorry, I'm just reading all the chats that go by. It's just really insane. It's just insane. And I feel like people are being desensitized by it, in a way. At least that's how I feel. It's just so many, like, God. Man, I don't know. I don't know what to say. I feel like a lot of people are very pent up nowadays. I feel. I get it. That's why I think it's so important when you're interacting with the public, or just like interacting, especially with people you don't necessarily know really well. You gotta always make sure you put your best foot forward, right? Because you never know what that person's going through, particularly now, in the state of the world, the state of the, economy, things like that. You never really know. So all right, let's check out these two houses across the street. Look at this. This is cool. It's like living in a little house in New York City. All right, so this is 2nd Avenue. Let's continue to head back. So I'm gonna cross here. I'm starving, actually. All right, we're coming up on the Bernie Madoff building. And I think the internet is a little bit spotty here.
By Thursday night.
I wonder what the vacancy rate is. In the Lipstick building. It looks completely empty. I wouldn't be surprised if it's over 90% vacant. I'll have to do some research on that. Brad's brain, you know, I didn't see that comment. What did he say? What did Steven Schwartzman say about remote workers? I know that Ken Griffin says he can't stand it. He hates it. He thinks the entire remote working thing is horrible.
There we go. Unicorn.
God, he was fucking scared. Brad's brain says remote workers don't work as hard as in office. Oh, for sure. I agree with that. Look, I think it's better to be in office, in my view, particularly when you're younger. It's better for career advancement. Melissa 2087 Because I slacked off big time when I work remote. I mean, I think everybody has done that to some extent. I think people need structure. I think you need a routine, right? I mean, we're all guilty of it. During the pandemic, to be honest, how many of you woke up literally 5 minutes before the morning meeting and said, hey, sorry about that, my camera's having technical difficulties, I can't be on camera, and you're still in your bed taking the call? Everybody's done that at least once. I've done that. I'll be honest, not a lot, but I have done that if I'm feeling lazy. In 2020, when the pandemic was raging, of course people do that. I've done it. Random YouTubers is still doing it? Oh, come on. All right, guys, I'm gonna end the stream and then restart it. I gotta do something real quick. See you guys in a minute.